Hey, can you all hear me? Is anybody in here with me? Let's see. What's up? What's up? I'm just trying to send out the remaining links to everybody. Oh, I can't post it online because I'm using my phone for the camera. All right. It's whatever. Okay, one sec. I'm gonna remove this real quick and just see. Dang, this mount is crazy. This mount is crazy. So I'm gonna just. Oh, it pauses the camera at least. Okay, that's cool. I can rock with that. I'm not quite good at the whole like structuring things for people, so I don't know. Maybe I should do. Okay, just posted it there. I'm not the candidate. Yeah, I kind of hate TikTok, honestly. This stuff doesn't really work. It's just like not easy to use. Like they don't want people to take them off their platform. So like, okay, I get it, but like they make it quite literally impossible, like in a way. So it is what it is. Could care less. Not really a fan. All right, sick. So okay, I think we're reconnected. Let's see what we got here. We could probably do one of these bad boys. Camera's clear. All right. So just quick test. Okay, I'm gonna know my boy Dan's here. That's what's up. Yo, yo. Um, let's see. Just a quick test. Can you hear me? If you can hear me, do a little thumbs up in the chat. Or like a thumbs up in this like emote section, I guess. I don't know. Just want to make sure everybody can hear me. Okay. Cool. You can hear me. All right, bet. I think I'm gonna probably kick it off. Some people have texted me and said that they're here, so probably just not trying to talk or waiting to grab their snacks. Grab your snacks and lock in. Cool. You're here. Right. So I tried to make an outline on exactly what I wanted to talk about, and I got really sidetracked and I kind of tried my best really. Let's see if you can hear me well, hear me a bit better. Okay. Yeah, you can hear me. Got it. Great. Thank you. All right. So I tried to make a list as to like what in total I wanted to talk about for real. And I'm really kind of trying, but I think I'm gonna just maybe just go off the cuff a little bit and just go through my list and kind of go through my journal as well, my trading journal, because I think that's a very important topic that helps me structure everything, right? So I think when it comes to trading, a lot of times, like when I first started out trading, actually let me introduce myself. My fault. Sorry. I'm Nedrick, also known as the Agent. As you guys probably all know me on a first name basis, Nedrick actually, but I'm in terms of the markets and what I do within the stock market, I'm the agent. For all intents and purposes, I guess in this case. And I started trading Q4 of 2029. I started trading in the future, y'all. 2019 Q4. It was like I think November, December range, 2019, and like I had some knowledge of the stock market prior, right? Being a business student as well as a lot of time in high school I spent learning the markets a bit just from the standpoint of like fundamental valuations, right? That meaning hey, a company is worth X amount because of how much money they make, because of how much IP the company owns and values, and because of that, from a very fundamental like Warren Buffett kind of way of looking at a company's value. I spent time doing that and learning those pieces in high school from a professor or a teacher, a high school teacher at that point when I was in the Business Professionals of America Club. So I spent a lot of time, and I've always been infatuated with the stock market. So like I'd say I really started trading and investing in a serious capacity 2019. But I've always been a man of business and a man of like really just trying to learn an understanding of business from a long time, like probably at this point well over 10, 11 years. I used to come home from school to watch Bloomberg TV to try to see what's going on in business, like what's causing this, what's doing that, what does this mean for this, XYZ, ABC. But yeah, I'm the agent. That's effectively, who I am. And I think when I first started trading, I I really approached the markets with nobody. I didn't really have a mentor or anything really to like specifically somebody that I can call upon to be like, yo, how do I go about this? And I've had to build this entire framework kind of, or mostly on my own, to just like say like, okay, this works for me. This makes sense for me. And there's going to be people online, right, that say, hey, this is the best way to do it, X, Y, Z, A, B, C. But ultimately, that's the best way for them, right? And that kind of really stuck with me and resonated with me because there's people who've gone on to make thousands of dollars, maybe multiple millions of dollars or whatever, trading a specific way. But in some cases, that specific way didn't really quite work for me. And my mom always says, like, if this isn't something that like really pushes you, or isn't something that really has your gears grinding at all times of the day, any moment that you have in between, maybe it's not something where your heart is, and it's also not maybe where you would like to put a lot of time in, to get into. So, and then another thing is, the way I view it is, in a way, there's people who've wanted to grow up to be doctors, and they have, right? And they always believed that they would be doctors, or always wanted to be doctors in a way. And then ultimately, something comes around to the extent where they're effectively like, well, I wanted to be a doctor, but I never thought I wanted to be a brain surgeon. And then now I'm a brain surgeon because this specific thing inspired me. Maybe I heard a story. Maybe unfortunately a family member went ill in this specific way. And now I want to be a OBGYN because, bringing new life into the world is beautiful to me. And that really inspired me, right? So all that to say, the stock market is just as compared to being a doctor, is the same way it can be compared to be a lawyer. You want to be a lawyer? Great. You have to put in multiple years of focus on that lawyer, on that specific, there's like a general broad context of law, right? Like, oh, this is the law. This is how I go about setting precedent for the law. This is how I interpret law. And then there's going to be another place where you start to dive into your specialties. You start to see that, oh, I don't want to just be a doctor. I want to be OBGYN. I want to be a pharmacist. I want to be these type of things. And you start to dive into your specialty because that's where you kind of, resonated with. And the same thing happens in the law, right? You want to be maybe a family attorney because you hate to see divorces or different things create issues, and so to speak. Or you want to be an immigration lawyer because, people coming into the country and maybe potentially even, leaving the country are going through these things, and you're inspired that way. The same thing happens for trading. There's people that trade to buy today at 9:30 at market open, to sell at market close. There's people that buy today to not sell for the next 15 years. There's people that buy today to invest in dividends, to just live off the dividends and the cash flow that comes to them. And it's your job, if you're new to the markets or if you're just getting your feet wet, to find what is your way, right? And And you may see this person said this, and this person said this, and this is the best way to make money in the markets, and this is the best way. Ultimately, they're all the best way. The same way how being a doctor is still beneficial to society and the health is the same way how trading and learning your way of trading is the best way for you, because that's what resonates with you directly, and it drives you further, and you want to put more into it yourself. So I may trade a specific way, and that may be the best way for me to make sense of what's going on. But just understand that that's not exactly how you have to trade, and that you can take certain bits and pieces from here, and bits and pieces from this report, and bits and pieces from this journal, or whatever, like this book that may come through, and you read and you figured, oh, this is good for me, or I see what's happening here, and now I'll take from that. And it's your job to piece all these things together to make your strategy. And that's it. So whether you want to take bits and pieces from my strategy, or from somebody else's, or from a book you've read, or something you've made on your own so far because it works for you, that's great. Do that. I'm just here to show you a little bit of my strategy, and you can pick and choose what you want to take from it or what you want to push forward from it, right? So that's the first thing. And then that leads into why you need a journal. You need a journal. You need a journal. You need to write your feelings, write what you are planning on doing, and create a structure. Because a lot of times in the markets, like this is also way before we get into the technicals and stuff, right? We're going to dive into the technicals soon, right? But a lot of times the emotions of what's going on drives your decision making. Oh, it was up 2%, now it's up 10. I got to jump in. Why am I missing out on this? I'm not able to capitalize on this. Oh my gosh, I can't believe like this is what's happening right now, or whatever, XYZ ABC. No. Write out the framework for you so that you already block out your hindrance and your ability to jump in and make these decisions off emotions. Making trading and investment decisions off emotions is the absolute worst thing you can ever do. Period, point blank, done, over with. You must train yourself to follow your strategy, to follow your system, to follow exactly how you are planning to do things, right? And it will work out for you and it will not work out for you. And then it's your job to then go back, read through your notes, see where things went differently, see where things maybe went wrong, and then begin to tweak those things and get to the finite ways to build out your structure. So that way you don't have to continually question yourself, right? You're going to be in scenarios where you're going to have to make a quick decision, right? And that quick decision may come off of emotion. But once you have a structure and a plan, a blanket structure that goes towards everything, it already helps the decision making for you. You're not sitting there computing and thinking in your brain, though, oh, I need to make a new decision right now. No, the decision's already been made on 40% of the position. And we'll get into that as well a little bit later on that decision. So what you should do is, even if you're trading right now, or even if you're not trading at all and you want to get started on it, right? Figure out what makes sense for you. Do I have time to give myself the time in the markets? Do I care to really grow this out and really push this whole thing forward to like be in the markets every day, day in and day out? Like maybe not. Is that something that I really want to push on? And then you can build your strategy again towards that. So let's get into my basic structure. My basic structure on things starts with the 3 pillars. And I believe I've outlined it somewhere here, and I want to just kind of go over it. So the beauty of my strategy, as it's grown into like what it's grown into for now, has been structured around three major pillars. The three major pillars are, here we go, market sentiment, right? And this kind of goes back to, understanding economics, understanding how supply and demand interact with one another, right? I'm sure there's great, tons and tons of videos on YouTube. If you haven't studied economics in any way, shape, or form prior to this, maybe tons of crash courses on, let's see, economics, supply, and demand crash course, right? Yeah, I love the crash course stuff. I've studied a lot of these bits and pieces in like high school and stuff, and like being in economics classes. But if you have some time, it would be great to go through the crash course playlist on economics, because that's where you can start to see. I'm gonna find a link on it real quick. I'll drop it in the chat. Boom. Crash Course Economics. I love this one. These are old videos, but these create great fundamental understandings of what the stock market is, and not necessarily specifically the stock market, but how you can leverage the stock market to be able to gain information and then make judgments on them, right? So ultimately, what you're doing here in the stock market, right, is the belief, or more times than not, to place your money in a basket, right? You're going to place some money here in this cup, whatever this is, so that later on, when you go dig it up, there's more money there. That's the simple fact of it. It's to place your money somewhere here so that it can begin to work for you while you do other things, while you go about working on your other endeavors or caring for like your other pieces of things that you want to spend your time with. You spend time with family, you want to spend time with your art, maybe whatever you want to do, so that you can later on dig it up and there's more there than what you put in before, right? So what you need to understand is that the stock market is a culmination of thoughts and perception and belief of something, right? The belief that Apple has created something new in the AirPods, right? And society enjoys the value that these AirPods, I probably shouldn't open these, it's going to connect stuff. Cool. That the belief is that society now, right, will enjoy the incremental benefit of what was created from a company such as Apple in this case, so much so that they will then begin to profit or generate more money off of what they've created now, or what they've shared or offered as a service to society, because the demand has increased. Right? Now, and that can happen in a literal sense, right? They may have spent $1 billion developing the AirPods, and then the AirPods have gone on to create X billion more, thus creating more value for that company. Now, here's the other piece. That can literally happen, and the stock market and the stock itself, or the value of the Apple share, can go up 10% because of that, or go up 4%, whatever that number is. But that's because the company has taken its current cash, its current assets, its current power and ability and designers and all the other thing and engineers to create something of what they perceive to be value, and then now given to the market to say, here you go, market, how much do you value this? How much do you value this? And then we see that in the sales. The markets then say, yes, we value the creation of the AirPods so much. We're going to buy so much of it. And then now you see the value in the revenues because they've gone on to spend 1 billion on this. And then they've gone on to then go sell 100 billion worth of this to consumers and to society and to individuals, right? And then that's how you can see how value is taken, right? So they've created the supply of these items and these devices for society. And then now you can gauge the demand because it's sold out now, because it's now something that everybody wants and everybody needs and everybody loves the noise cancellation feature, especially here in New York and you hopping on the train and you're not trying to like hear anybody or people going crazy, right? Or you're on a call and it does really well with being able to cancel out external noise while you're focusing on what individuals are saying. Or you can hear the music so crisply now as opposed to what you had prior with wired headphones. And the demand will show itself, and then now it's up to it's the job of Apple to then go ahead and say, hey, yeah, we got to make sure we make more of these because the demand is crazy. People want it, and it's sold out, and it's us this, it's that, it's ABC, it's XYZ, right? And because of that's been a major piece in economics, right? So now once we see that, we then can be able to then say, oh wow, this company has taken what they had in resources and assets and cash and engineers and time and XYZ and all its resources to then create a product or service or something to perceive or something to create and offer it to society, such as YouTube, such as the iPad, such as this AirPod, such as this microphone I'm using right now to talk to you all, and created that value so that now, wait, this company has created value to society now because I can use this microphone to then talk to you all. So in a way, this is a more valuable company to society than it was before they made the AirPods, before they made the microphone, before they made letter openers. Like, you know what I mean? Because now, like, this is valuable to somebody. Now, how much value is the question? Is something like a letter opener more valuable today by today's standards than maybe 40 years ago when email wasn't around, when physical mail was more important, right? Maybe in today's creator economy, everybody is an influencer and everybody's online, and maybe a little microphone connect by USB-C is more valuable today than a letter opener is for some people, right? So this is kind of where you can start to gauge and pick and choose and say, hey, oh, this is interesting. So like, yes, this is valuable, still valuable to this day, but is it as valuable as a microphone is today? Maybe not. Maybe not. So maybe a company like Qualcomm, who's announcing that, hey, we've been a technology company, we've made processing chips, we've made all these things. Remember, you guys heard about the Snapdragon chips, right? Maybe the Snapdragon chips aren't as useful as they are today as when they were back when the HTCs of the Android world were super important and things of that nature, right? So Snapdragon, Qualcomm, but then now all of a sudden, what did they say? Oh, they said that they're going to be working with data centers to help them build out their racks so that then they now can be a part of the AI world. And we all know that AI right now is the most important thing since sliced bread. So now what? The perception of Qualcomm has increased from being as useful as a letter opener prior, right? Because Snapdragon processors weren't doing too much. Like they weren't, like what were they doing? Not really much in the technology space. To then now being somewhat of somebody saying that they're going to be a major force in the data center space to be able to help power AI, to be able to help with this, that, and ABC. And now all of a sudden, the perception of the value has changed in the same similar fashion as to how this letter opener is still valuable, yes. But is it as valuable as this microphone right now? As I'm sitting here talking to you, is it more important that you all can hear what I'm saying or that you can see me use this letter opener and open up some mail some around here? It's not as valuable. So when you kind of like take a chance to look at stocks and take a look at an understanding, now that's a more long-term perspective or point of view, right? Where hey, maybe in the longer term, this letter opener is more important. Why? Maybe because I run a business that deals with mail more specifically than the microphone, right? So now my perception has shifted. Is the microphone as important as this letter opener now? Not really. Maybe I don't make YouTube videos or any kind of content, and I really just maybe use the microphone for some family photos or like family videos and little bits and pieces here and there. Is that as valuable than maybe me running a whole mailing business? Maybe let's say I run USPS or I run UPS and I'm the CEO of that company or whatever that is and such, and I get a stack of mail that comes to my desk every day. Obviously, now this is more important to me than this. But that's the perception. You see how the perception can shift as the demand from individuals can shift as well? So now it's your job to figure out in the stock market, in the totality of everybody in the investment world, is it more important for the totality of people to view this microphone to be more important or to view this letter opener to be more important? And that's where you can extract value. Because now you can see where the majority of value, where the majority of people can price and place their value in the society in this item, in this service that's being offered by that business, such and so forth. So that's the major, like zoomed out, like look on what happens in the stock market. And that's why the price of stocks, you'll see XYZ happen and the price of stocks will jump 50%, 20% on a day because the perception of the value of the company in the total market space has shifted. It has gone from what was maybe a base level of 20 or whatever number that is into now it being, oh shit, oh, can I curse on here? Well, I guess I can. It's my own thing. Um, to oh wow, it's so much more important now. It's so much more valuable now. It's wow, right? So so kind of like in the back of your mind when you do these things or when you look at news or when you see certain things come out and you say, hey, fundamentally before you place that trade, is this fundamentally changing the perceived value of the stock? Whether it will literally change the value because the company's made a product now that will sell out, or the belief or the perception of the company will change because of the societal total context of that thing that was created or service or whatever that may be, right? Okay, cool. So let's break back into the three pillars. And the three pillars I've got are market sentiment. And that's basically what I just kind of broke down to you. The total market in the entire space, whether it's S&P 500 or even the Nikkei in Japan or even the DAX in Germany or even just if you want to just focus on US markets, just US markets as a whole. Market sentiment. What does the macro picture look like? How is the greed and fear index looking? What does the volatility look like, right? And that's kind of where I get into where I sometimes talk about the vol index. And if you're part of the Integral Pulse and some of the data points that I share out with you all, I am very, very data dependent. Jerome Powell says the Fed is data dependent. I don't believe him. I'm data dependent. The agent runs on data. Okay, listen. He talking about data dependency. This data. Blah, blah, blah. The man has quite literally the access to probably the most important data points in the world, but for some reason he ignores the data. That is my bias in what I just said. So cool, but that's it, right? So I look at those major points to try and help me understand the current macroeconomic landscape. How does liquidity look like, right? And again, I mean, I'm not going to have time to go into every single word and the definition of it all, but if you don't know what some of these words mean, please just jot it down on a piece of paper. And I hope you all have a piece of paper listening to this. And then go back to it a bit later and be like, all right, he said this, or all right, he said that. Or if you have a question right now on everything I've gone over so far in the first 35 minutes, drop it in the chat. Drop it in the chat right now, right now, right now, right now. So I can address it real quick and we can move forward. But that's the first pillar, market sentiment. If things look good from a market standpoint and the totality of everything, maybe there's not much concern to happen. Maybe there's not much of anything to really go off of. So the market has no reason to kind of oh, I can do a poll. Cool. So I could do this. I'm gonna do a poll real quick. Any questions? Yes or no? Drop it right now. Boom! I just dropped the poll. Any questions? No. I can move forward. Yes, I will answer your question. Feel free to send it in the chat. I got you. So we'll go from there. Yeah. Maybe you guys are just listening and running in the gym or something on the treadmill. So hopefully not. Nope, no questions. Cool. All right, moving forward. Now, that's the market sentiment. Whether what Trump's going to do tomorrow, that may change the sentiment, and now the whole market done dropped because he done opened his mouth and said something stupid, or he opened his mouth and said something awesome. That means great news for the market, right? And that's what can move the market. Then secondly, chart sentiment. That's where I step into looking at the charts, seeing certain things on the chart, how it's perceived, and technicals, setups on certain things and bits and pieces, right? So if I were to open up a chart real quick on some previous stuff, maybe I can open this up real quick. I think I can show you all my screen as well, right? Allow. Oh, sick. Okay. All right. Cool. So now you can see the chart as well as me. That's dope. This is where a lot of stuff looks crazy right now, right? And this is where I said the technicals, the setup, the volume, the volatility, all these things mean something to me. And that's the second pillar, right? Where I go in and I draw these beautiful lines here and I kind of make art out of a bunch of candlesticks and price and so on. And that's great. And then the third and final pillar is basically options flow. Options flow has been something I've more so recently added to my arsenal. And that has been something super, super vital for me. Like it's gone from, oh, that's cool. Like that's cool to see, to like, this helps me find new stocks, find new companies I want to trade, know the timing on certain things, I get a real edge on the market. Because ultimately, like I said, the market is a culmination of society's participants in the stock market. So whether I place a trade for $2,000 or 10,000 or even $100,000, I can't move. Me, one single man, cannot move an entire market or an entire stock that is worth, in this case, Palantir, $475 billion. Oh, you can't quite see it. It's underneath. $475 billion. I can't, me, Nedrick, I can't do that. So I need the force of the total of everybody. I need everybody to pile in this thing with me to be able to move and be able to gain this momentum so that I can appreciate, so that what I put in the bucket yesterday can now be more tomorrow, more next month, more next year, 10 years, whatever that is, right? So using the options flow helps me kind of join in on the ride and kind of piggyback in a way to say like, okay, what you've outlined from the market sentiment from the first pillar, from the chart analysis in the second pillar, into now the third analysis, you have been able to see, wow, yes, what you've outlined so far seems to be correct, Mr. Nedrick, Mr. Agent. Now let's see if everybody else is going to be in it with you to help you move this along. Are you going to see $1 million sweep, $1 million order coming in to help move this asset along? And then more, and then another one, and then another $500,000, and then another piece here, and another piece here. And you start to confirm your bias that, hey, the overall percentage of the world, of the people, of the market participants in the idea are agreeing with you. And the agreement of that is what is going to push the asset higher. The same thing that happens with earnings, right? The same thing will happen with earnings. Why? Why, when you see a stock drop earnings, right, you see it jump 20% or jump, like let's look at Amazon. Wow. And if you don't know what candles really, like what this graphically is saying, like I implore you all to please, take a moment to try to see what candles do. But basically it's just a graphical interpretation of price. On the right hand side, it's price. On the left, on the I believe the x-axis here, it is time over price, right? So what we've seen in this case is from this day of October 30th, we've seen the price end at $222.82, as you can see on the right-hand side. And then the following day, it opened up here at $250, again on the right-hand side, where you see price in the blue section. And then just above this little like tool right here, you can see that it was a 12.22% increase from the close on that Thursday to the open on that Friday day in the markets. And it made a 12% jump. Why did it make that 12% jump? Because the overall cumulative perception of the value of Amazon as a stock, as what it provides to society, as all of it increased. Why? Because they presented a 24% increase in earnings potential, stating that they made $1.95 per outstanding share, compared to what was estimated to have been made at $1.56 a share, as well as meaning like their profitability was 24% higher than what they thought that they were going to be profitable by. And their revenue was 1.27% higher than what they thought they were going to bring in revenue. So if we look at how businesses just work, again, go back to maybe market sentiment or just the overall macro picture, right? They believed that they were going to make 177 billion, and from that 177 billion in top line revenue, after spending it on, engineers, data centers, people in their warehouses fulfilling Amazon orders, people, what they spent in labor to have the people work for them, all the things that they were going to spend, right? They were going to start off with $177 billion they brought in an income. And then they figured that after spending all the money necessary to be able to provide the data to people in the data centers, pay people out as employees, and do all the things they need to spend to be able to provide those things and have, the actual infrastructure in place to give my package, but hey, Mr. Agent, your package is here, right? They figured that they were going to bring back at the end of the day $1.56 on that. But instead, they increased their revenue by just a 1.27% and was able to make 24% more than what they planned. So what? The perception of the value of the company is going to increase dramatically in a short period of time because now this newfound information has been brought to us. So now what I have to try to say to myself is, hey, what new things are coming out? What is happening in the space? What is fully going on that I can be able to see in some way, shape, or form that, hey, Amazon may be able to smash earnings. They may be able to do a lot more than what they projected. so that I could be on the winning side of this 12% increase within a week, within a few days, within the following day, right? Okay, cool. So I'm going to go back to, to this, and hopefully we can, figure this piece out. So what I want to do is I want to go over 2 pieces of things that I really like and kind of just show you how I structure my trades from A all the way to Z. Cool. So as you may know, I trade stock options. So it's a bit of an amplifier as opposed to just buying one share, right? And it makes a bit of a difference, right? But the way I do it is I kind of define my risk. And what I mean by that is I define exactly how much I'm willing to lose when I'm wrong and exactly how much I would like to win when I'm right. So I do that all beforehand, before getting into the trade. So actually, let's do that right now as we continue to watch on things. So right now, I have this kind of structure where I have a ton of watch lists, but as of late, I've been really focusing on 2. I have a watch list that is separated out per sector, so that way I can see how things are moving, right, sector-wise, and I can see where the energy and effort is placed into the market. Why? For me to get an understanding on the sector. So how is AI doing? How is nuclear doing? How is space technology doing? How is data and compute? Robotics, quantum, drones, rare earths, energy sector, memory is a new one I just added, a sector here, where they're focusing on DRAM because that's going to be a big piece that's used to build out AI data centers. All that, right? And I think that's really that major piece. So if I were to cool. Ooh, wrong one. That's hilarious. Let me see. One moment. Cool. All right. So let's build out a trade with me right now. So let's look at market sentiment for the first pillar. There's a few names that I wanted to look at. So I go to this watch list. The watch list I'm looking at, these are a few names that I like that I just haven't maybe a position in. Like these are like the active positions, like what I'm currently invested in, generally speaking. So I just have to like manually kind of flip and go back and forth, right? So Amcor is a name that I've been watching. So let's figure out what they do to make money. They are an electronic technology company in the semiconductor space. They are currently valued at $7 billion, almost $8 billion. What happened to the slide? Maybe it disconnected. Okay, cool. We're back. Yeah. Oh, thanks. New people are here. Cool. Any questions so far on anything? Let me know. If you guys got any questions, drop it in the chat, please. Drop it in the chat if you have any questions. Yes or no? Maybe so. Probably not. Anyway, cool. I don't know if I have to do another poll to do it, but it's above. A poll is there. I could maybe do another poll, I guess. Maybe I end this one. But whatever. No questions. Oh, that's cool. All right. Okay, gotcha. Welcome. So I'm about to structure out a trade right now and do a bit of some research. So if I usually go to Perplexity a bit, I love Perplexity .ai /finance. They do really well with like summarizing things, right? So I may not want to do a deep dive into the company because it may ultimately be like kind of a dud, right? So like it may be, it's worth looking and doing all the research, of course, yes, but a lot of times it's not really worth it if like, the summary of the company off rip is, oh, this is not what I wanted it to be or what I expected it to be. So maybe it's not really worth it to start off with, right? So let me see if I can change this view. I could change it to show maybe just the window here. Cool. All right, so Amcor. Amcor is a company, to my understanding, before I even dive into what this is saying, it is saying that it's a technology company in the semiconductor space. And within this space, it is a leading provider of outsourced semiconductor assembly and test services, servicing global chip manufacturers across segments such as mobile, automotive, compute, industrial electronics, headquartered in Tempe, Arizona, founded in 1968. So to my understanding, based off reading this and some prior research into the company, they do a lot of the testing and the quality assurance of semiconductors before it gets sent out to the field, and then being able to confirm, like, hey, like this is good to go. Let's go with it, right? So if we look at the first pillar, right, the first pillar on Amcor, AMKR is the ticker of the macro sentiment. Cool. What is it? Like, what's the macro sentiment? Semiconductors. How do we feel about semiconductors as a whole? Important? Not important? Maybe so. Yes. You know what I mean? I'm looking right here and I'm seeing recent developments. Amkor Technology suspended work on NVIDIA's H20 chips in August following 2025 directives from Chinese authorities warning that they're basically not going to do it because of security concerns and national security. Cool. So they're working with NVIDIA. Okay. To some extent, maybe not for the H20 chips in China, but they're working with NVIDIA. Semiconductors are important right now. So the macro sentiment, bullish, off rip. Because semiconductors is the space. It's the space right now getting all the attention, all the love, all the care and compassion, right? So that's the first pillar. We got the macro sentiment. And now let's look at the overall macro sentiment. Maybe let's see. I could maybe check this out. Fear and greed index right now. Is it able to show me that? No? Okay. Perplexity, not quite there yet. Let's see. Let's see what's happening here. Cool. The fear and greed index. So it's saying extreme fear is 0, general fear 25 to 44. Oh, what's up? What's up? Hey, man. All these pieces here, why it matters. So let's see if we can find a fear and greed index. Oh, okay, cool. So we got right now. Ooh, okay. Right now we're relatively fearful. It's at 37, the index. Oh, that's the cryptos one. Sorry, my fault. So let's see what the stock market one. Okay, stock market seems relatively fearful as well. So right now, it's not looking too good on the fear side. So maybe we'd like knock down the bullishness a little bit on a way, right? So if we were to actually, let's look at it from a very probabilistic standpoint. And the probability is that if we win, that's it. Probability of winning. So we're starting off with 0% probability of winning because we have done no research on Amcor yet. We're starting to get there, but we're looking at the macro space, right? The fear and greed index, cool. Right now the fear and greed index, not too great. So maybe it's not quite bullish, right? Okay. But then let's now check. Maybe I could just do trading view in this instead of in a separate thing, so that way I could just show. All right. So we also know Amcor. We also know Amcor is technically a technology company, right? Because they work with semiconductors. So if we look at the S&P, SPX, looks like a relatively bullish trend. Cool, plus 1%. S&P is not necessarily technology focused, so let's look at the NASDAQ. Okay, bullish perspective over the longer term. Long term, month over month, this is the monthly candles. Very bullish, right? Look at weekly. Excuse me. On the weekly standpoint, pretty bullish, right? Like pretty bullish. One thing I don't really like is the fact that this candle was like all the way up here, and now we've created this huge wick of like 7 points basically. And if you've, I can share with you all some materials on candles as well, specifically, and how to read candles and read the perception of it, right? Similarly, like how we have this long wick candle to the bottom, all the way up to the top, shows that this is a bullish sign in nature. And similarly, how in the inverse, a long wick candle here from the top down is a slightly negative or fearful, or we got 7 viewers. We lit. Okay, turn up. Yeah. Yes. So on the weekly, not too hot. On the daily, as well, not too hot. Like it's not doing too great. But I mean, like, delete all this. Like, we don't need this. This is an old trade. Remove it. Remove it. Remove it. Remove it. Let's delete it all. Right. So it's not necessarily doing too hot. So this is where we're getting this is where we're getting some other pieces here of what's important, right? We've got on the longest term, on the monthly point of view, it seems very bullish. Seems very, longer term, great. On the shorter, as we go shorter and shorter and shorter into the time period, it starts to look a little bit less bullish. So that's something to keep in mind. So if I'm willing to go long Amcor here because I like the company, maybe I need to be skewed to the longer term in the way I position myself to be able to extract value on this stock. So now I need to position myself and say, okay, well, hey, in the shorter term, the overall technology space is not looking too hot, right? So maybe I need to change my perception on things. Maybe I'm not buying today to sell tomorrow. Maybe I could buy this stock to sell it 2 months from now. Because on the monthly side of things, it looks better. But on the shorter time frame of things, it doesn't look too hot, right? And then I can get even more granular into the macro viewpoint of what's going on to then now see what's going on in these full semiconductor space, where I can look at ETFs or baskets of similar technology companies and how they all interwork with one another, right? Does it, for in this case, right, does it matter if Tyson Foods is doing well for this Amcor stock that we're talking about? Got a question. Okay, I'll give it a read, look through it. Thank you, Cody, for the question. Bet, let's do it. Is it important that Tyson Foods does well as a part of some other companies for Amcor? Not really, because food doesn't really tie into semiconductors, right? And so on. So maybe I need to look more into this sector, look more into what total is going on in the sector of semiconductors to get a more viewpoint, right? So similarly, like I shared with the other one, oh wow, semiconductors have done great over the past few months since April, basically, right? 72% month over month. On the weekly point, it still looks good, but hey, we've done a lot on the upside. Maybe we want to come down a bit, it seems, right? And you'll be able to visually look at these things and get the understanding on that by just like understanding candles going forward. So that'll be a whole separate scenario. But I can also share with you all the candlestick Bible, which can go on to that, right? And on the daily side of things, it doesn't quite look too great as well. Maybe on the shorter term, maybe in the shorter term, we kind of creep back down to this 347, 48, 450 range before we continue to make our next leg back up, back into this 370 plus range, right? And so on. So I need to build out that structure in my head that maybe right now in the shorter term, it may not do too well, again, unless something else comes about and changes the overall perception of this, right? Who says, as of right now at 5 p.m. on a Sunday, the market's not open. Not much news is also coming out. Not much things are changing the value or the perception of the value. But shoot, if Amcor creates or drops a news thing tomorrow that says, oh, this is going to be a part of this new supply chain that does this XYZ, guess what? The perception of the value of the company has fundamentally changed. And what I'm saying right now about short term going down and maybe it doesn't look too good, it won't matter because the market's going to take it right back up because the perception of the value has established and it's changed. So that also goes into your question here, Cody, where he says, hey, can you talk about institutional capital rotation into similar companies that they think have more immediate potential, even though Amcor, for example, may still be a good investment? So let me see. I think if I'm understanding your question correctly, you want me to potentially look at and see how, institutional capital, and in this case, the definition of institutional capital basically means the big boys, right? And when I talked a few minutes ago about the 3 pillars and how I was saying, flow being really important because my $5,000 or my $1,000 on a position isn't going to move the market, but a multiple $100 million position from a company like BlackRock or a company like Citadel is what's literally moving the market and what's literally doing that, right? So so I hope I'm understanding that question correctly. If that is the basic, understanding of that, give me a thumbs up if possible. And I can, go a bit deeper into that. So basically that quick, or the understanding of that question really goes to that, as institutions put more and more capital into things, the perceived value of that will also change, right? Oh, and a great example of that happened recently was Nokia. A few days ago, NVIDIA came out and said that they're investing $1 billion into Nokia. Who's calling my phone? Who's calling my phone? Who? Right? Like, I don't really think, Kia has been much of a value proposition in recent until NVIDIA came out in their conference this week and said, hey, we've invested $1 billion into this company because I don't even really remember why. Why did, did NVIDIA... Let's see if Perplexity got my back here. I hope they're going to fold on me. I don't really know why they did. And maybe it could be important. Maybe it doesn't. It's not important. So they said they took a major move in telecommunications, saying they bought 2.9% equity stake over 166 million shares at $6, basically, to accelerate the development of AI native infrastructure with a joint focus on integrating NVIDIA's advanced AI capabilities into Nokia's radio access networks, the RAN networks for 5G advanced and the future of 6G wireless technologies. Cool. Cool. And that's something that can change the perception of a stock from it being at $5.54 to now NVIDIA saying they're going to buy it at $6. So they're buying it at $6 because they view this company as something of importance to be able to develop out their 5G radio networks and then beyond into 6G, right? So ultimately, the perceived value of Nokia goes from, a dumpster fire of an old legacy technology company that really hasn't done much to now NVIDIA saying, like, listen, we're going to put money into you so that you can help us build out what we need to get done in AI, and kind of go forward from there. So now, not only that, but stocks are sometimes valued at the future. Stocks are valued currently the future value of their cash flows, meaning how much money can this company generate in the next 4 quarters based on the capital and assets and things that they own currently, right? And that's how companies like Nokia jump into $7-8, even though NVIDIA just bought it for $6, because the perceived belief is that they will go on to go through this partnership and they will now become an integral part into NVIDIA's growth of agentic AI and the use of AI in the case of radio networks and 5G and even 6G and beyond, right? That's the perception. And from that growth and from that development, they will now be able to spend money into CapEx to be able to build out the infrastructure needed so that then they can provide these radio networks for NVIDIA, for NVIDIA's customers. And then when they do all that, then they can be able to increase revenues and gain more revenues going forward, right? Similarly, like how we talked about Amazon, they came out and they had their earnings and they beat revenue by 3%, and they were able to beat their net profits and their net earnings or operating earnings by 21%. So that perception, again, increased. It has shifted. It has gone up in value because now the belief is that they will make more money because now they're connected and tapped in with NVIDIA. NVIDIA is the biggest boy on the market. The biggest boy on the market going to bust off some bread for his little homie over here and make sure he's straight so that he could do what he got to do with his little business so that we could all come back together and we could make this whole thing stronger and we could just rock and let's print together, young bull. Like we're going to be good to go going forward and we could do all that. So that goes almost directly to your comment, Cody, as to how institutional capital rotations into similar companies can do that with immediate potential, where a news article such as or a conference event such as NVIDIA coming out and saying, hey, XYZ, we're looking to put money into ABC, let's get into it, can immediately change and create an opportunity for someone like yourself who's tapped in, who's able to get the notifications and understand, or maybe you're just sitting somewhere listening to the conference calls or going through and say, oh, wow, this is immediate value and this is immediate return on value that you could potentially gather and share, right? Because the perception has shifted. So let's get back to all that and then building out the position in Amcor, right? That I'm talking about, right? So this is not quite the best technical setup per se, but let's get back into it. So we already established that the macro sentiment on semiconductors and chips is not necessarily bad. It's actually relatively good, but the main concern I have right now is how much more can it do in this shorter period of time as opposed to like what's going on. So then this is kind of where I started to get into. So we have the macro sentiment. The macro sentiment right now, total, let's say it's a 7 out of 10. It's not bad, not great, maybe even a 6.5. Because right now we don't really have much pushing it forward. It is currently on an uptrend in the longer term, but what fully is pushing it even further beyond that, like right now, right? Not too much, right? But again, like I said, I can be entirely wrong. Some awesome news, like I think Trump talks at 7:30 tomorrow or tonight on CNBC or 60 Minutes or whatever, and he can go out and say something right now that will make what I'm saying right now at 5 p.m. entirely wrong, and say chips are everything. Chips is this ABC XYZ. This is the most important thing. He can go and say, "Yo, I was just at the Amcor factory last night, and it was beautiful, and it was the perfect thing, and cool, and it'll be great, and the company will jump to $40 tomorrow." And I'll be wrong, but if you're able to catch that beforehand, or be within the news, or be able to kind of stay ahead of the curve in a way where you're able to capture these bits and pieces and things, and oh wow, this happened, this, that, and there. You can be positioned beforehand and positioned with duration, so you could just sit through it. You don't have to worry about trying to catch news and jump this, because you're already in the position and you got time, and you could just let it rock, and you just you wake up and you're up percents and you boom. Right. Or see option flows coming on Friday evening, and you see the sweepers coming in too, and seeing like, yo, this is the positioning. This is kind of how, somebody knows something. Remember that. Somebody knows something always, always, right? And whether it's you because you were there and you work at Amcor, or you know of something, or you saw the presidential truck drive by, and you're like, yo, they turned into Amcor facilities. Oh, okay. You know what I mean? And you can get the edge that way, or you can find different bits and pieces to find your edge. You can look into what companies are saying, what are they like, all the little bits and pieces of information. Very, very important for you to gauge and see where to position yourself potentially in the market here. So macro sentiment, again, looks cool, looks great. Now let's get into the chart sentiment. Chart sentiment. Second pillar here. I'm getting a bunch of pings. What's all this pings about? These questions or these? No. No, not really. Okay. Cool. Yeah. So let's look at that. Amcor, right? The second pillar is technical sentiment. How is it looking on a micro status point of view as the company, right? So semiconductors, as I've said, this kind of plays into macro, but I think as a whole, let's look at the technicals, right? So we have some pretty solid upward movement as a whole. We're going to zoom out. Okay, cool. On a monthly standpoint, we seem to have a base here way down at 18 or 20, right? It's not necessarily something that we potentially would see tomorrow. Like we're not going to see $18 in the stock tomorrow, right? Unless something materially comes out and changes what's going on. But at least we know that there's some type of long-term support here, maybe, so that we can continue to watch and keep a lookout for. Right, as you can see, multiple times it's come down, bounced, right? Bounced. It seems to love this 18 area. Cool. And if you look at the tops, we can see the higher ranges. The higher ranges, there's no clear flat higher range here per se. But we do know for an absolute fact that the previous ultimate high was 44.80, almost 45, right? So that's a general high. Get into the weekly now. Okay, cool. Now we can kind of see a more clear, defined like resistance here at the 34s. So for something to change materially, And for them to break through the 34, I would say it has to be relatively strong because we've tried to break through the 34 several times. We've broken above and then got retreated back and so on and so forth. So if something changes where we break the 34, that's pretty good. And like after last time we broke 34, where did we go? We broke 34 and went to 37. Okay, cool. We broke 34. We continued and basically got to 40 when we saw a little mishap here. And then after that, we ultimately did keep going, pushing all the way up to 44. And then we saw it continue break down, right? So that's basically the extent of the historical value. Oh, no, we have more historical stuff. We have all the way back in 2000 to kind of even go look at. And let's see what happens. So even here, we had into 34, where we saw a push, break, push. Sorry, a push, break, push. And then we stepped into 44. Then we stepped into the 50s and 60s, where we see new highs up here. So I could draw that line up there and just say 60 to call it flat. Boom. Before we came back, push back down into 44s, where we see multiple drops and pops at the 44. So this 44 seems to be a huge historical point of, yo, we're like here, and this is important. So let's get back to modern day times now. Cool. So now we got all this history of previous price points that we can use to create and develop our setup, right? So I'm like, all right, cool. I like the break. If we break 34 here, and then if I'm also looking at the weeklies, I don't usually get too tough into the hourlies, right? These shorter time frames, not much material information is there for my strategy per se. Maybe for the entry points to get into some of these bids and asks, but I usually stay monthly, weekly, daily, by the way. So if that's your question, there's your answer already. Sometimes I go into the 4 hours, sometimes. So we get into the weekly. Last week, we bid down, we push back up. And as of the last few weeks, we can see that we've been in this range, right? Last 1, 2, 3, 4 weeks, we've been from 30 to 34, 30 to 34, back again 30, right? So this seems like we're kind of bouncing back and forth. We're kind of bouncing back and forth here. We haven't really decided what is the total value of this company. Is something going to come out and change the value of the company? Maybe, maybe not, right? So now this is the way I'm viewing it, right? Okay, cool. Let's see what we got here. If I come here, and I'm actually change these colors just so we don't like confuse ourselves with what I'm about to draw out. But I also want to put one on the 40 as well. Cool, 40, boom. Now, I'm saying to myself, all right, I like this company. I like what's going on. Let's see if we can find some flow. Let's see if we can find some flow. So we can get a bit of an understanding. Ooh, not too much. Okay. Dang. I'm going to go check something else real quick. But if I were to just create this framework real quick, right, I'm going to basically go to my other tab real quick. Sorry. I'm going to basically come here and say, like, okay, Oh, I do have some flow for you. Okay, awesome. Lovely stuff. Lovely stuff. Okay. So I'm going to basically come right here and say, all right, look, if we break the 34, I think I'm long. I'm long. Why? Because last few times we broke 34, we pushed to 37, we pushed to 40, we pushed to 44, right? So, and we also pushed to 35, 36, right? So, and other times we didn't really push. We We broke 34, we didn't make it. Broke 34, didn't make it. We didn't quite get too much. We didn't break 34. We didn't go anywhere. So I know that if we don't break 34, that roughly by about maybe 32 and a half, let's just say 31 or 32, let's just say 31 and a half, we're cooked, right? We're wrong. Because almost every time previously that we broke the 31 and a half, we have not gone on to make that newer high. If I'm long, if I'm positioned long bias to make money on the upside, we haven't seen a scenario where a lot of times we break the 34, we push back to this, and then we actually go beyond. So now I'm saying to myself, all right, if I'm long here at the break of 34 with some good volume, right? Let's turn on the volume for y'all real quick. Cool. With some good volume and things are lining up here. The market sentiment looks good. The flow potentially looks good for the longer term. Like, okay, cool. I'm going to put my risk line here. So from 34 to this, that's 6.5%. That's kind of a lot. 6.5% I'm willing to risk here on it potentially moving into 8.5% or 8.3, or in $40, 16%, or if ultimately 30%. So really, this risk to reward is not too great. So I may even make an adjustment to that. I may be a little bit closer, tight-lipped on my stop here, just in case, so that I can make this make more sense to me. So maybe not 35 and a half. Maybe I'm going to go 32 for this case, just to make it make more sense. So I'm risking 6% roughly for a potential 10% or 9%, or ultimately 10, or maybe even 18, 20. Cool. So let's figure this out. So we got this piece kind of down, and I'm not married to it, but it's an idea right now, right? Cool. And then if we break this, right, we break the 34, we push into 37, we maybe come back a little bit after 37, because, markets just don't go up, okay? Please, if you believe that, get that perception out of your mind entirely. Throw it away, put it in the garbage. It's probably one of the worst things you could do next to gambling on 0 day to expiry call options. So boom, put that up. It's gonna have some pain points. Then maybe it steps into the 40 point, and then we see another pullback resistance or another piece right here, and then ultimately we step into that, right? And that's kind of how I perceive some of those pieces here, where we followed the rules. And look, I may be wrong. This could potentially happen, and we see this go to this in 2 days because of some news that came out, because of XYZ came out, right? But it's about positioning yourself to be able to capture this without having to fret or stretch or stress about, oh, I'm not in the trade and blah, 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 right? So the way I'm viewing it is this. And the way I'm going about now watching this is this. So I say, let's look at the flow. So last flow as of recent. Are we still here? Yep, we're still here. Cool, we're still here. Let's see what we got. Let me charge the flow. I'm gonna type in huge flow on this ticker because that's kind of what I like to look at. Like, right? Because like a lot of times, if you see flow on names, and mind you, it's an $8 billion company. So huge flow on this is very different than huge flow on a company like Tesla, right? So like, for example, me putting a huge flow on an $8 billion company, you may not see flow that a lot of flow, at least above a few grand, like in certain cases. So the huge flow I saw on Friday was somebody putting, ooh, here we go. Okay, so we got 2 major pieces here. Let's see if I could just screenshot this real quick. If I can remember the daggone screenshot thing. Let me just save it real quick. Oops, nope, that didn't work. Boom, delete that. Find this one real quick. I kind of just want to put everything all in one. Is this the flow? Where did that go? Sorry, guys. Nope, that's another stock. I think it's this one. Boom, perfect. So let's see if I can. Can you guys see that? Let's see. Are you guys seeing that? Yes. Flow. Great. Lovely stuff. So this is what you'd say is the options chain and the volume here. So what I'm looking at in this case is basically what I'm seeing in this case is a pretty decent focus in a more shorter term positioning to the downside. So it looks like people there's some flow here, right? Some flow positioning towards calls, but a majority of the volume, 38,000, as compared to these 2,800 positions, are people selling their calls post earnings, right? So you see them go to the bid, and then people bidding on puts, so increasing the bid, and they're opening this new position on puts for the shorter side for the 24 strike, while we trade up here at 32, 31 for a December focus. So interestingly enough to say that they seem to be lightly positioning towards, is that what that means? Or, no, actually. So this is a put seller. So this is somebody's bidding on puts. So this is where things get a bit more complex in a way. So a put seller is someone who's looking to basically collect the premium on the I'm gonna just do a ChatGPT thing real quick just to show like maybe I could collect the thoughts a bit better. I wasn't expecting somebody to be put selling. But okay, put selling is technically, when you're selling a put, you're basically making the deal that, hey, if the stock falls to a certain price, I'll buy it from you at that price. So you get the paid money up front, which is the premium. And if the stock stays above the price, you get to keep the money. Nothing happens. If the stock drops below that price, you have to buy the stock at the lower strike price, right? So basically, you make money if the stock stays at the same price or goes up. So you buy the stock cheaper if it goes down, basically. And you're basically saying that I like this stock enough to own it if it gets cheaper, and I will take some cash now. And I'm also willing to wait by selling these puts and collecting that premium and making that deal. So put selling in a way is a very bullish is a tactically bullish positioning when it comes to options. When you see somebody opening on the bid side of a put, that means that they are put selling and looking to, they like the company and they would like to buy it somewhere around $24 and probably accumulate a position around $24, and maybe not so much up here. So the way I'm perceiving this right now is they are expecting to potentially buy this company because they like it to the upside. And they want to buy that between now and December. And we're already November 2nd. So in some way, shape, or form, this is tactically bullish. And then you have people who are just going to go regular long, who like these people who are saying, okay, 32 call, this month expiry. 36 call, March expiry. November call, 35, 36 calls, right? November expiry. January expiry for the 41.59. Also, by the way, I would never trade this strike price. That's such a crazy thing to like. Yeah, there's no volume in these. There's not much volume in these strike prices. Stay away from them. Okay, generally speaking. But for the most part, they're pretty much good. But I just tend to like be like, just one little rule that I have for myself. I just don't like these awkward numbers. You know what I mean? Like, I like to keep my numbers flat, simple, and move forward. Like you'll see as well, because I usually round up and round down kind of in a way as well, because psychologically, everyone loves these round numbers. So basically we got this one being tactically bullish, this one showing call side to 32. We're already at 32. Cool. But they can still make money holding the calls as it pushes into 34 or 36, maybe even 40. This person out the money by about 4 points, talking about March. Cool. So basically what I'm seeing is they're saying in the next month to 4 months, Amcor could be effectively worth $38 to $40, right? $38 to $40. So the way I'm viewing it as, cool, this is a bullish position. I may be willing to take it, right? And if I go back to some more flow, I could try and find some more sweeps for us. Not that much sweeps on there. But last Tuesday, somebody also swept this call contract. Maybe not a good. Last Tuesday, the 28th of October. Yeah, just as last Tuesday. They said the March 36 calls, right, for $500,000 post earnings, and it's 7.6 times the usual volume. Showing to me that last Tuesday when I showed y'all that call, and mind you, that's the same that's the same contract as this, the 36 March 20th contract with good volume, and most of the bids or most of the people buying were hitting the ask side of the bid or hitting the ask side of the contract, right? So when you buy into something, you want to just buy it at market, you're hitting the ask. You're basically telling that you're willing to pay whatever somebody's willing to sell for it right now to at least be in it, to just get into the exposure right now, as opposed to somebody being in the mid, right? The mid is basically saying, I'm willing to sell something at something at $1, and this person is willing to buy it from me for 50 cents. That's the dollar is the ask. The bid is the 50 cents, and the mid is somewhere in between that. So if the option contract is basically selling at $1, right? So $100 for the contract strike, because we know we multiply by 100 because per share, you have the right to buy or sell 100 shares within the right of a contract. Cool. $1, that's the ask. 50 cents is the bid. The mid, I am hitting somewhere at 75 or 80 or whatever's in between. So great. If I'm using the ask, that means that I am willing to pay whatever the current market is trying to sell it for to get the exposure immediately right now. And if I'm hitting the mid, that means I'm waiting. I'm allowing myself to wait a little bit. I'm putting a bit more value in waiting as opposed to being in it right now. And then somebody sitting on the bid side, for the call side of it at least, right? Not the put, because the put would be the selling of the premium. Somebody sitting on the bid side means that I'm more willing to wait for real, as opposed to sitting in the mid or sitting in the ask. So you get to see a gauge in sentiment. So once you see more and more people on the ask side, that shows a visual representation of the appetite towards being able to get long now and be in the position now, as opposed to people who are more reluctant and saying, you know what, I'll wait it out. I'll wait till it hits my price because I want to pay this specific amount, and that's it. So sometimes when you see other options change and other options chains, sorry, and you can see how they go in on it and they're willing to wait and be able to say, okay, I will wait on the bid side. And then the other side, they're saying, okay, I am willing to really pay top dollar right now, right here, right now to get into this regardless. And you'll see that. So if we come back to this, we start to see a continual hit on this option. People like the 36 to happen, for March to happen. And I like the ability to wait and be able to sit in positions and not have to rush to sell because I'm losing because of theta or because of whatever that is. So I'm now currently starting to favor this 36 call. Why? Because big money is getting put behind it. Relatively big volume is getting put behind it, right? And they're looking for 36. So they're looking for a relatively solid upside as a price target, roughly, this 8 to 9% from here, from being at 32, into they're looking for a 12% upside within roughly the next, two next month, over 3 months range. So I'm saying I'm willing to risk, maybe here at the open down to 32. And mind you, this is not a hard stop sometimes. That's why I call it manage risk here, because I like to just use it as a point to re-reflect. Do I like the stock? Do I think it can increase? It's not a hard stop, right? But it's something to say, hey, Nedrick, hey, agent, focus. Is this what you still want to be in long term? Where are you? How much are you down? How much are you up? Where are you currently positioned in the market? And I can reevaluate myself from that point of view. So I usually come and I'll set an alert on this price so that I can, whenever it goes below that price, I get bing, 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 ding, ding, ding. And sometimes I forget to do that and it sucks because I miss trades, but it's part of the structure. So now I do that and then I'll say, okay, what's my price target? What part am I willing to sell something? Well, shoot, I'd say I like it right here, the 37. That's the first price target for me because we've seen that, breaking 34s, we can step into 36, we can step into 37. Roughly, for the most part, the last 4 times we broke 34, we've touched 37 here. We didn't make 37 here, and we made 37 here. So we're 2 for 3 with hitting 37 from the break of 34. And if we even go back to like super olden days, and we want to add that other one in, we are also break of 34. We at least touched 37. So we're 3 for 4 probability. We're 75. We're at a 75% hit rate of it touching 37 from break of 34, basically, historically stating that. So that's why I like it. So this is where I may say, cool, I'm going to go long. Let's just say 4 contracts of the March 20th 36 call, because now it gives me opportunity to sit in a position for the longer term. Cool. Any more questions? No questions so far. My fault. I'll be forgetting that the chat thing is over here. It's currently blocked by something else, but cool. Hopefully y'all still with me. Let me get a thumbs up in the chat if y'all still with me here. Or if I lost you maybe somewhere, I can maybe kind of quick dial back. But quick thumbs up. Let me know how we doing. All right, sick. We're here. Cool. Gonna keep going. So now what do I say? I say, I'm gonna position myself where I don't have to rush. I don't have to stress. I don't have to drop and drop at a dime of a switch when a notification goes off that I need to sell. So I'm going to position myself where I have time in the contract. I have a ton of theta in the contract. And I also have, I'm slightly out the money. So as we continue to move towards in the money from being here at 32 and above 34 and then above and beyond, that I like the positioning for us long-term to be able to push into it, right? And I'm going to be able to collect a good amount on the delta increase as we pushed into 37 and beyond, because we're up 4 points. And we're going to be able to enjoy the theta bump that we have to be able to keep that premium cushion for us to save our our value of what we've invested. Maybe we bought four, like, and let's bet. And I can't really tell, but maybe let's see if let's assume the contract for the Amcor contract. This one I'm liking is at $400, right? So, oops. Oh, here's the text pub. How do I move the text button? Can I move it? Damn. I don't know how to use the text thing. I don't really like text. Okay, so let's say I bought 4 contracts at $1 a piece. Here. Cool. About 4 contracts here. Now we've gone on and we've taken the trade, and let's say price has moved into 36.37. Now what am I doing? I'm going to say, cool. Now my risk, my managed risk here line, we always define our risk first. I don't need my managed risk here line to be at 32 anymore. Actually, I believe I can potentially save money and save heartache and losing value and be able to move my managed risk here maybe slightly above the 34 or the 34 itself. Now, I've moved my managed risk here from 32 to 34, and I can protect my downside. And then I can go ahead and be able to say, oh, I'm going to lock in some profits. So now, what do? This is the basis of my trade. I do something called trim. I sell 1 contract here at, let's say, 1.3. Great. So now I've locked in 1% of my trade at 30% gain. I've locked in 25% of my value that I've put out into the market to be able to gain profits at 30%. And then I've protected myself on the remaining 3 contracts that I own by moving my managed risk here line to here. So now the value of those contracts won't necessarily be at 1 if we go back down to 32. Maybe it'll go to 1.1 from here. So now I can manage and say, okay, cool, I've got that, and I've protected myself. So basically, if all things go against me, I've been able to lock in 25% of my total risk capital at 30% gain, and then I can sell the remaining 75% of my risk capital at 10% gain. How do you lose? You've effectively protected yourself and fortified yourself so well that the probability of you losing has dramatically fallen off a cliff, because you're not going to let it go all the way back to your entry point anymore. You've also got a ton of time in your favor. Cool. Now, let's say it continues to go. So now that was basically the worst case scenario. It went against you, went back to 34. You didn't really like it. It closed at about 33.50 some or 38 something. So you sold. You're out the position. Maybe you didn't sell exactly at 1.10. You sold at 1.08, or even, let's say, God forbid, you sold at 0.9. You sold at 0.9. Cool. So some of them you lost money on, but you were able to lock in the 1.3. So you end up breaking even on the trade, and you effectively lost no money because you sold 25% of your value up here at 1.3. You locked in $30 of value, and then you ended up losing the 0.9 when it went against you, maybe in your managed risk here profile. Just want to check the stream, make sure we're still good. Cool. And you've lost that $30. You're flat. And let's just show the math real quick, right? You put in $400 because you bought 4 at $1, at $1 per contract. Cool. Then you sold one of your holdings for 30% gain on one of the dollars that you put in. So you made, so plus 30. So now you're here at 430. You made $30. Now you went ahead and the trade went against you. Let's say you sold at 110. Now you were able to lock in the remaining 3 contracts for another $30 gain. Where did you end up at? $460 of a win. So you basically returned a little bit less than 20%. I think that's like 16%, something like that, profit on a trade, right? And you've done that by protecting yourself, by moving your risk up. And again, if it went against you, let's say it did go against you, and you sold at 0.9 because it pushed down really, really fast and you weren't maybe able to get your sells, you sold at 0.9. So now you lost the $30 because you initially bought it at 1, and then the 3 that you had remaining after selling 1 at 1.3, you end up losing that. So then where you end up? Back at 400. You lost nothing. You're back at square one. It gives you the opportunity to preserve your capital and move forward into the next idea, into your next trade, into whatever goes forward, right? And that's basically a part of the worst case scenario. Worst case scenario, well, absolute worst case scenario was that you bought it at 1 and then it dropped immediately back down to 0.85 and then you sold there for that loss, right? You sold there for that loss, but effectively the idea is after doing all the research, after checking your first pillar, checking out the macro sentiment, the bullish sentiment, drawing up your graph, seeing the flow, checking out all these other components, is that to help with the probability of it not doing that immediately. Not saying it won't, because it will, and it can. But that the probability of it happening goes from something of 70% chances into something of, it's not really too likely for it to go against me immediately because so many things are lining up for the upside. Now, let's continue in this example as we go forward, right? So we sold 1. We did a trim at 430. So we took our capital from 400 to 430 invested now. And then now we're going to move into what I believe is the next step. So next PT for me was the 40 line that I really like, because 100% of the time that we broke the 37, we've pushed into 40. Not saying that it will happen again, but there's a high probability that it will happen or it can happen. Why? Simply because the last 2 times it has broke 37, it has gone into 40. Here, back in June in 2024, and well, again, historically, as I showed you way back then. Cool? Cool. So now we're going to move this line into the 40 piece. And let's say this happens over the next month or so, right? So it's no longer November, but we're sitting here in December roughly, and it's gone on. So you've lost a little bit in theta, but you've appreciated so much. So your delta is taking over for that theta, as well as you still having 2 or 3 months on the contract time. You've been able to sit through it. And the benefit of also sitting through it is that, you don't have to sit here to try to time and know, when is this news thing going to come out? When is that? This happened. Stock jumped 10%. Let me get in. Cool. You're already in it. You're already gaining the benefit of ownership from way prior. I don't have to sit there and be like, I wish I caught the news or I knew of this. And No, you did the research before then. You get to reap the benefit of that positive news. We step into the 40 now. Now we stepped into the 40. What am I going to do? I'm looking to trim again. But guess what? The contracts have stepped out from being at 32, 33 into now being in the money because we've passed the 36 point and we've gone into 40. So now we've taken it from out the money to at the money into deep in the money, meaning that the contract premium has appreciated dramatically now. So now I'm looking at this, and to be honest, the contract may be worth $200 at this point. So I can trim again. Now what am I looking to trim? 200. I'm selling one contract up here at 200, or maybe 2. Maybe, let's say let's sell 2 contracts at the 2, because now at this point we're super in it and we're up. So what does that look like for me now? My total capital goes from 400 in to 430 out, right? So now we're at 430, we had 130 out. So total capital or total profit at this point is How do I want to visualize that for y'all? So total profit is $30. Then we stepped in, we sold 2 more at 200. So now we're at $230 profit on this trade. Awesome, right? And then we get to have the opportunity to, guess what? Move our managed risk here line up. We're moving it up, and we're maybe not down at 37 anymore, but we could be a little bit more protective of our capital and put it to 38. Because guess what? If we push back down, this may get into 150 in terms of the contract premium at this point, right? And then at that point, we could say, you know what? Maybe something comes out, something materially changes about the company, and it doesn't really work out. It broke my managed risk here line. I need to reevaluate. I'm wrong. Something materially came out, changed the news. The earnings came out. It was not good. It's things of that nature. And I can sell here for the 150. And then I can leave and go about my merry way and collect another $50 on the last remaining contract that I have, and then be able to exit the trade and say, boom, I made 280. Right? So then I can look back and say, wow, I put $400 to work and I came out of there with 280. I made well over 50% in this position, and I've made money, and I can move on with my life. Simple as that. And I don't have to be in the market all day, every day, concerned about what Trump is going to say tomorrow, concerned about what this is going to be doing tomorrow, or whatever. Yo. What's up, agent? Yeah, what's up? What's up, guys? What's up? Right? So I don't have to be concerned about what's moving in the market tomorrow, right? And I can say, oh, wow, I've made, well over 50%. I believe this is like a 60, 70%, roughly 70% win by putting $400 to work and then collecting $280 on that 400. So now I exited the trade, sold out of everything, cool, and I'm leaving the game with $680 after me putting 400 to work, right? And that's another maybe not so beneficial positioning or not so great positioning. Or in another case, let's say that doesn't happen, and actually it continues to run, and it makes its way into 44. Now at this point, you got one contract left, right? You've purchased it at such a discounted level, right? And it goes on to then be able to go into 44, maybe even 45, and you still have time and duration, because maybe now by that point it's February. It's February and you're so deep in the money, you still have time. Or maybe it's the beginning of March, you still have time. There's theta in this contract. There's also a ton of delta in this contract because you bought it at 32, 34 breakout, and you're also $4 over the delta on the contract. There's value in this contract. So let's say you don't sell it here at this managed risk line, because we kept on pushing up, and then now we created a whole new price target of oops, no, let me not move that one. We made a whole new price target of this 45 range here. We were able to grab this. We grabbed the 45. Cool. Now we're able to sell our last contract that we have for 3.3. Basically selling. So this is the awesome part I love about options, right? You're trying to tell me that I'm going to sell my remaining contract for almost the totality of my original position. So I put 4 contracts at risk, and my last contract is going to find its way to basically be worth the entire amount of money I spent in this position. Like, that's the beauty of it. So I'm going to go ahead. I'm going to move my managed risk here line up even higher, right? Maybe into 42 here. Cool. So now if it doesn't go into this target of 3.3, guess what? My managed risk here line, I could sell my remaining one, and this one maybe I could sell for let's assume I can sell it for 2.5 roughly. What? Okay, there we go. 2.5. So then now the other probability or the other scenario says, cool, I sold the original, hit the first price target for 1.3. I was able to collect 30 bucks, 30% on that like one contract. Great. I moved on. I collected another price target as it moved into 40. I trimmed a little bit. I trimmed a good, decent amount, actually. I trimmed almost half of my original position here at 100% gain because I bought at 100 and I'm selling here at 2. Cool. I defended myself. Let's say I defended myself and I had to sell here. Got it. I was able to gain. I walked out of there with 280. No. Cool. Or I was able to continue to hold until it broke into this price target. Everything went smoothly for me. It was awesome. I was able to collect an additional 230 bucks in profit. So now I'm able to walk away with $460 in profit, 100% plus on this entire position on being patient, following your analysis, and continuing to watch and see how things are changing. Every single day, every week, you're going to look at this chart and look at the time and look at what you have invested in and say to myself, hey, has the market sentiment changed? Are semiconductors still doing what they need to do? Is there more news coming out fortifying the value and the perception and increase of the value of this stock time and time over again? Okay, cool. How is the greed and fear index? Is the Federal Reserve cutting interest rates or are they hiking interest rates? Are they concerned about the market in totality? What is happening here? Is it not? Okay, cool. It's not. Markets are doing well, and we're doing great. Cool. My position is still drifting higher. That's lovely. Chart sentiment, technicals, all these things here. Check. Cool. Check. We're good. All these bits and pieces here showing, wow, we're great. We're doing well. We've pushed and gone along the path of possible price, and we've been able to strategically defend ourselves by trimming when we're up, moving our managed risk line, and remaining logical with where we are placing our price targets, and then being able to get about that. And then also continually watching options flow, seeing how more and more people are stepping into positions, right? Maybe they're no longer sweeping the 32 and 36 call, but they're sweeping the 40 call for June of 2026 or beyond in 2026, right? So they're continuing to be more and more bullish, and 500,000 here and 250,000 here, and that's awesome. It's good for us. It confirms our bullish bias in the longer term time frame that says, yo, I'm right basically here. We're going to continue increasing and we're going to be able to capitalize on this. So I basically effectively went and said, hey, if everything hits the fan and it goes terrible, and I bought this position, my total risk that I could lose is $400 if the contract goes to zero tomorrow, next month, next week, whatever. Is it probable that it can go? Is it possible, that I can go to zero? Yes. Anything can go to zero in the stock market. That's the crazy part, right? But the question starts to really become, is it probable that it goes to zero in a week? Not really. Why? Because you bought so much time in your contract. You've built in a defensive mechanism already against the downside. And as long as you followed your original managed risk here line, a point or two lower, you're really only going to lose 10 to 15 to 20% roughly of your original premium. So it's not really probable of it happening. And if it does happen, what are you going to do? Sell. Take the loss, book it, and move forward. Find the next trade. See where the next flow is. Find where the next market, sentiment and belief is going towards. But if you're able to follow this framework that I've kind of like built out and laid out for you all this evening with the multiple pillars, these three variables of market sentiment, chart sentiment, and then flow and option sentiment, right? You can see how you can take something like $400, risk roughly $50 on the loss, and turn that into 100% profit by building out this very defensive structure that then goes on and moves forward, right? So cool. That's what happened. You bought 4 of them at $100. You sold 1 at 30% profit here at 1.3. You sold 2 more at 100% profit. So now you only have 1 contract left. and you're able to let that one sit and ride, because why? You've already booked $230. You've already the original $400 you put at risk, you've taken it and enjoyed it and booked it and said it's back cash, $230. So the only risk that you have right now is the original $100 that you put out in the market. You've only have 100. You've gone on to decrease your risk, and you've gone on to capitalize and be able to collect profits as well on the upside. You go through, you hit your final price target. If everything went for you and is awesome, it was great, good, you could sell your final price right here. Boom, your final price target. And you could sell your remaining position here at 3.3, right? You gained $230 on this one contract. You gained $200 on these two contracts you sold. And then you gained an additional $30 on the original contract that you sold there. Or if it went bad against you and it came back because you moved your main risk here line up, you could sell this one contract here for just over 100% at 250. And maybe let's say you didn't make the full 460 plus, but you made an additional $150 on this one contract here. And then that's how you can go about protecting yourself and expressing your trades and going about doing that. So that quite literally is the structure for almost every single trade I put on. The same structure. Buy, define risk. Manage risk hairline. Okay, cool. That's been defined. Now, where's first PT? Turn it into a free trade. Exactly. You turn the whole thing into a free trade because you took all the money out that was at risk and you put it into your cash and you have nothing at risk. Because even if, so for example, right? Let's say this whole thing keeps running up and you're up, this one contract that you still have ownership on, you only bought at cost of one, right? So you only bought at cost of one, and the entire trade that you've put on has basically been taken out the market. You've taken all the cash that you put into it out of the market. So all that's left in gains, or all that's left in value that's in the market, is your gains. And you've strategically defended yourself by getting contracts with duration, a strike that makes sense, option flows that is continually backed, the market sentiment that is continually bullish and backed. You're going to continually want to see, okay, what is SMH doing? What is the semiconductors of that market doing? What is the total market doing of tech? Okay, cool, right? And maybe you get some awesome news about institutional positioning, right? You get a news play that comes out and says, oh, Jane Street owns 5% of Amcor now. Awesome bullish news there. And then there's going to be awesome times where you sit through the trade and you're expecting it to go to 45, and you wake up the next morning and that news story comes out, because we don't know the news stories fully. And then you wake up and the thing's at 50. And you're like, dang, I was not ready for that. But I was able to capitalize on that. And I didn't know that the news was going to come out. It's not me looking around and saying I got a crystal ball and I'm some guru and, oh, look at me, I turned my trade from $100 into $1,000. You should follow me. No, bro. It's just about positioning yourself, right? It's the same thing as when they say, oh, you're lucky, you got lucky, or whatever. No. Or maybe I did get lucky, right? But I positioned myself to be able to receive the luck when it came around. I've put in the work. I've put in the hours. I've made a sound thesis. I've gone through all of it to be able to receive the opportunity of the luck that came to me, and it just so happened to be this. So anytime that also another thing too I wanted to share with you guys, I used to beat myself up all the time when it was like, oh, dang, this stock went 20% and I missed it. Or, damn, and this, whatever. So lock in. Go find the next trade that's going to go 20%. You just saw one go 20% today. Cool. In the next 30 days, there will be another 10. Go find that 10. Focus on what's next. Stop focusing on what happened. And if you're going to focus on what happened, actually go study and see why it jumped 20%. Was it something to do with NVIDIA? Did they make some awesome partnership with OpenAI? You know that's the play right now. You make a partnership with OpenAI and that thing jumps 10% just because of it. OpenAI, ooh, sexy name. You get what I'm trying to say? And start to build out your way to see, oh, okay, that happened here. That happened with this. This happened with that. Okay. You start to recognize these patterns, put the patterns together, make the recognition. Understand that this can happen. Position yourself to be able to receive it if it does happen, as opposed to trying to guesstimate and jump the gun and say, oh, it will happen, or oh, I've got to receive it when this happens. No, just position yourself, define your risk. Don't put all of your risk towards it, and just focus on that. So that's my strategy. There's thousands and thousands of other traders that are also amazing traders that have entirely different strategies and will say what I'm saying makes no sense to them. And I respect them still the same way. You know why? Because they've also probably gone on and made thousands and multiple hundreds of thousands of dollars as well with their strategy as well. And they will look at my book and say, oh, this is what you've done and this is what you've put together. I respect the way that you view the markets as well, because it's my piece of pie that I've been able to go and collect with this strategy. The same way how someone else has been able to maybe buy same week contracts and collect their piece of pie because they understand the now. I've just been able to accept that I don't really have a clear understanding of now, in the sense of this will move tomorrow, this will move today in the next 30 minutes. So, I just stick to what makes more sense to me. But yeah, so got a question here. What do you think about seemingly irrational reactions of market news, like sentiment that just doesn't make sense, but you can still trade the price action? Ooh, I love this one. All right. This is where we get into this bad boy. Last week, you see all this volume right here? Oh, Beyond Meat, Ryder, the what do they call them again? Wall Street Bet Boys, the Reddit boys. They put it together and they said, let's do it. Run the play. We're gonna buy it. And listen, there's ways you can do it. I generally stay away from these things, Cody. But I just want to show you all something. Let's see. Cool. When I look at the markets, that's enough. When I look at the markets and you explain that, like seemingly irrational reactions of market news, like sentiment and things, I look at like this. It's a pendulum. It's going to move from one side to the other. People are going to perceive that the value, maybe this one's better. All right, cool. Right, pendulums, right? And they're all moving at different speeds. They're all moving. This one's moving a bit slower. This one's moving super slow, right? This is Warren Buffett right here, moving mad slow, catching the pendulum. This one's moving a bit faster, right? These news events move these pendulums from one side to the other, from valuable to less valuable, from terrible company to awesome company, the best thing since sliced bread, right? A lot of these news strategies can help you visualize these overreactions and then be able to kind of understand that, right? So what else will I say? So An irrational reaction may be something like this. NVIDIA is going to 10 trillion tomorrow. NVIDIA that we all know is at 4.92 according to Friday's close, is going to 10 trillion. You trying to tell me that this thing's going to 100% in a day? Something as big as this. Is it likely? No. But there may be some news that comes out on certain companies, especially, right, like NVIDIA itself, where it can go 4, 5, 10% in a day. It's possible, right? Something as big as that, it's possible. Is it highly probable to do 10, 15, 20% on such a big company? Probably not. Probably not. Because where's all that money going to come from to be able to move that, right? Again, it's not impossible, but we also have to remember probabilities of it occurring. So these irrational news events that come out that create these huge reactions, and I'm trying to remember. Got it. I found it. Rigetti. Maybe it wasn't a news event particularly, but price movements that are irrational, basically, not really defined and actually backed up by literal fundamentals and the ability to increase revenues and so on and so forth, right? But Rigetti, if I go to my list here, I've been telling people for quite some time now, please be careful in the quantum space. This quantum space, I love it. It looks great. It makes perfect sense for a lot of people in a way, to be able to like capitalize on these shorter term moves, like Oklo even. Maybe Oklo is a better example for real. But I'm trying to show you guys an example. Awesome stuff. So back in July, I posted on the WAP. If you guys are in my WAP, I post tons and tons of market details, market updates in the morning. If you're not a part of the WAP already, please give it a join. I just will drop the link here in the chat if you want to join. Feel free to go ahead and join there. I greatly appreciate it. That way you get direct access to almost all my research immediately as I publish it. Thank you all for joining. If you've been here this time, it's already 2 hours. I greatly appreciate it, but I'm going to continue to go into this topic real quick. So the chart logic on this is focused on the art of the breakout pullback into the range and then basing at the bottom of the breakout, and then where it ultimately looks like a continuation into higher highs after establishing market consensus that the asset is worth the current price and possibly more. That's it. That's effectively the full sentiment. So that is me going through and knocking off pillar 2, chart sentiment, right? Chart looks nice. And this is NVTS, APLD, Rigetti, and Oklo. This is Rigetti here at $17, $16 a share back on July 21st, where I posted and said, hey, it's a possibility that we step into, from 17 into this resistance at 20, out, above, and beyond. News comes out similarly with Oklo. We're here, we broke out, we based here at 52, and we continue to break. We're going to touch these highs. It seems like we can continue to break from 68 and probably step into 80, 88 roughly, right? Let's just look and see what happened in this case. Rigetti, $17, $17.60 from July 21st. Rigetti, beyond that. Beautiful. Followed the possible path of price and went monstrous after the fact. I said I was right here at 17.16. We came in, we relaxed a little bit, we dropped 15 some percent. Cool. Now we're ready to go. Expansion process, 200% plus. Big move. Similarly with Oklo. Cool. $68. We came out, we expanded out 75, potentially came back. Let's see what we did. Wow, where is it at? Okay, it's down here. You know what I mean? Came in, came out, expanded, boom, push. Great price action, right? So I was playing this from roughly like 58, 60 range, and then it stepped into 85. I trimmed, it stepped into 92, and I fully sold out. I was like, this is insane. I'm up 1,000% basically on the contract, and I have so much time left. I don't know what's going on in this company because they have no revenues. The only thing is that the news and the belief and the perception of things, and I actually talk about it in Taiwan's podcast that I was at, that was gratefully, invited to be on a few weeks ago. At this point, I believe it is out now for you all to potentially go look it up. Go ahead and look at Taiwan Huey's page, everyone. Where I talk a bit deeper into this, but a lot of times news, and this is the big thing right now in this market, right? The main thing before 2020, 2019 was fundamentals more so. Oh, is the company making money? Is it making a lot of money? Is it able to increase its ability to make money, right? And that is what is determining its value in the stock, its share price, things of that nature. Now, ever since COVID and the whole GameStop era of memes and things like that, the definition of a stock price now has shifted. It is no longer just about valuation. Not saying valuation doesn't matter, because it still does. But it is now also heavily important to know that the perception of a stock's price is also very valuable. The perception of these companies such as Uklo and Rigetti and Applied and right, these companies that did these things from the WAP on the chart logic that I shared with you all, right? From this $11, $12 push into what is $34 now. We're talking about effectively a 175% increase in 2 months. 3 months, basically. Like, what? This is not because they made so much more money. Granted, they did really well with their earnings, right? Smashingly well. Like, right? But did they make that much more? Not quite. Like, not quite. And then a company, more specifically like Uklo, these companies that don't have revenues, they're running on news and perception. They're running on the news of, oh, they made this partnership with the Department of Energy, and oh, they're working with Sam Altman and OpenAI to be able to provide these nuclear reactors, these smaller nuclear reactors to provide energy for the AI. Are they doing these things right now? No. But they're perceived to be more valuable because they ultimately are on track or have plans to potentially be doing those things, which goes back to what I was saying earlier, that the stock prices are determined of their future cash flows. A stock is priced today at $100 because people believe in the upcoming 4 months that the value will be able to be extracted at that $100 price mark. So sometimes when stocks overgrow their future earnings, that's where you start to see the compression in the stock price after they've realized and more earnings comes out and it says, well, they're not really going to be able to hit those earnings that we projected out 4 quarters ago. And you start to see the price deflate and come back a bit to reality, the same way how these pendulums go about their way, and they go from overextension, over perception, over belief in value into, okay, let's get back to reality. Let's figure out what's going on. Let's see what's happening. And it's up to you to figure out, like, hey, like, what's going on here? Have they outgrown their current ability for their future cash flows in the upcoming 4 years? Is too much going on, right? You go back to market sentiment. Is the Fed going to cut rates sometime soon, or increase rates, or is there going to be a new trade policy that comes about that changes what's going on, right? Or even a few years ago, the main story back in 2022 was how are we going to navigate inflation, right? Is our GDP, are we going to fall? Are we going to slip into a recession here because GDP isn't growing quarter over quarter here? All these other factors and questions come into the game, and they're always continually changing the pendulum, changing the speed of the pendulum, changing the range of it, right? The flow of it. Do you see a ton of people putting more money on the put side for the longer term? Maybe the stock isn't going to increase. Maybe the stocks increase so much, and the expiry of these puts that are coming through are for like the next month or so. So they're saying, maybe it's currently overpriced, and we're going to see a compression shortly. Maybe. It's up to you to try and figure out what makes sense. And then after you figure out what makes sense and what's highly probable, figure out how you can now define yourself, define your risk, protect yourself to then be able to do it. Like what we talked about with Amcor, right? And similarly, what I've been able to put together just this past week with Palantir. Cool. We broke below the managed risk here line. We came back above it. I was like, oh, okay, cool. I was able to, I took a loss on this trade originally, but I kept the same thesis. Break below the 180, I don't like it. Break back above the 180, and we have some some good follow through here because I was seeing flow on the Palantir side of things come in and confirm this. Let me see if I can find it real quick. And that was on the 23rd. So let's see what flow happened on the 23rd. My fault, guys. I should have probably put this a bit together, but it's okay. I'm seeing this type of flow come through on the 23rd. 23rd, 190. What? Excuse me. We're at 180 right now. Someone's willing to put 334K on the line in a short duration contract for the next week expiry for a whole 10 points higher? What? No wonder why we gapped up in the next morning and we already started up here at 183, 182, 183. What? And then as the days go on, what do we see? The following day, the 24th comes by, this day. What else do we see? We see flow like this. Same week. Oh, we're going 200. Willing to put 146K on there? Are you kidding me right now? Right? And you get to get the it's almost in a way like confirmation bias. That, oh, I put this trade on, believing something could happen. And then I'm seeing other people with much more money come in and step into it and say, yo, 300K, 140K, 230, 240K, all within a short period of time that we could potentially hit 200. So now I'm starting to look at myself and I'm like, dang, maybe I should have put my price targets a little bit higher, because not only are they willing to come in and step in aggressively, but they're stepping in super aggressive. Like, I wasn't thinking we were going to move 10% in the week. I was thinking I was going to need some time on this. So it happened, and then, you kind of end up moving on. And in the same way, similarly, let me see, y'all seeing this? Great. What I'm learning is that proper defense allows you to be wrong way more and still win in options. Exactly. And if I'm wrong, so what? I don't care. I've kind of been able to live to see another day. Like, My win-loss percent at this point, I think, is like 57%, 58%. But I'm way more profitable. And if you look at that, like, um, I didn't, change my TradeZella settings to show the R as opposed to the profit margin. Um, but like, if you look at that, like I lose way often because I've been able to just be like, all right, I'm wrong here. And then just because I have the structure to say I'm wrong and move forward with it and not get married to the belief that I'm wrong and then be able to come back the very next day and go back long into it. Like Friday. Oh my gosh. I was so pissed at this actually. But whatever, move on. Friday, the day starts really strong on this. I'm seeing tons of flow into Tesla. I really like the technical setup here. We see a cup showing out of this cup, this torch setup. We break my managed risk here line. The overall market is sinking, not doing too well. It's also a byproduct of the fact that I definitely bought next month contracts as opposed to usually kind of where I am. Like right now, I'm usually buying March-ish, generally speaking. I broke my structure, right? I broke my structure. And this is an example of me breaking my structure and me learning from that now, right? I only bought next month contract. So I come back to this position. I'm down 40%. And I'm just saying to myself, like, nope, I'm out. We're below the major risk here line. It's not a good idea, not a good look. The overall market's sinking. I don't really like it going into the weekend. Unprecedented things can happen over the weekend, XYZ. I'm going to protect myself and just fully get out here because I'm following the rules of the manager's here line. I come back, the remaining like 30 minutes in the market, everything up. Like, dang. So it didn't even break below and hold below the managed risk here line. It actually just went, kissed it real quick, and ran right back up to 456, which is basically kind of the entry that I got at like 445, 455 range. I'm like, damn, I could have been sitting here break even into the morning. And then the amount of flow, again, that I saw on that was rather disgusting. It was awesome in a way. It was, I'm going to drop some right here. The Tesla flow. Come on, man. No, this is way too wide. How do I make this smaller? Maybe I change it like this? No. I don't know. I don't really use the text thing often. So maybe I just eliminate this extra stuff that I don't need. This. Take this off. Take this off. Cool. It didn't do it. What the heck? Oh. Look at this flow, bro. Absurd. Someone's, and this happens, this comes in at 336. 336, my bro. Like right before market's about to close. Last 30 minutes, basically. Like, what? Excuse me, sir. You telling me? And they came in above ask. They need that. They need the fill now. They're aggressive. They want that now. And then they're willing to put at, oh, look, another one right here. This one came in at 345. 1.4 times usual, so 40% the usual scenario. Okay, cool. That's pretty aggressive, right? This guy's saying November 530 calls, 152 grand. Excuse me, sir, but 530 is 15% higher. Not saying it's not possible to get there in the upcoming 2 weeks, but what the heck is going on to make you think that this is going to jump 15% in 2 weeks? Or at least drift directionally there aggressively in the next 2 weeks? Because you're swimming in this position. in this particular position of the November 14th 530 call, you are swimming against the tide because your theta is decreasing probably much more than what the price of Tesla can potentially increase to offset that theta. Above ask is wild. Exactly, bro. Like what? And they're putting 7.8 million on it to go above ask and to go to 460. So cool, 460 isn't aggressively higher. It's like 1% higher. But this is somebody who's looking to be probably like look to be able to buy these shares or exercise this contract ultimately to be able to buy these shares in the long term. And they may be like, this is also like one of those things where I say you could change levers and pull and tug on different things to be able to get more expected value out, right? Someone can say, I can get the 460 calls with the December expiry, and I can get the March calls with the 460 expiry. As Tesla continues to drift higher here, the person who has the December expiry is going to make more than the person who has the March expiry, right? But if it goes against them, the person who has the March expiry is able to weather the storm a bit longer as opposed to somebody who has the December or the November expiry, because this person's fighting theta and they're losing premium way faster than this person at March. So this person positions who says he's going to put 7.8 million on something in December, he's positioning himself defensively by picking a closer strike to ultimately be closer in the money sooner, even though they're going to expire next month. And this person here is taking a different case and saying, forget the strike. I'm willing to risk the strike and the time theta that we make an explosive move here within a shorter period of time going forward. Right? And I'm willing to set this up. So this was the trade I had on. I believe I grabbed the November 470 strike, and that one just got melted when we came back in touch. So I may want to relook at this heading into tomorrow and see, one, now here's the other thing about flow and sweepers. Sweepers can come in and they can tell you how many people are buying and how many people are selling or doing puts or doing this, that, and the other. But sometimes, right? Sometimes you don't know the intentions of those people. They may be buying right now to sell 5 minutes later. They may be buying right now to sell on Monday at market open, right? So what I tend to do is I like to look at open interest. Open interest is another data point from the stock market and specifically options markets, where it shows you not only what happened, but who changed the open interest. So if I come here and I show you this real quick, how we're doing about the stream. So I'm going to show you the stream. What? Open this real quick. Is it not going to open? I thought it was going to open. There we go. It's not opening. Hold on. 1 second, y'all. See, like, how did I get to open this? Oh, I opened it on file. Okay, so let's do this. Pendulums, important, but this is annoying. What am I doing wrong here? What am I doing wrong here? I don't know. Maybe I can just do this. Oh, I could probably, let me do this. Is that gonna do it? I don't think so. Nope. Not what I wanted to do. Man, you're annoying me. I'm gonna just do this real quick, this way, and just show it like this. So this is open interest. This is the change in the contracts. So basically, what it's saying here is that somebody, this was the Friday morning open. So from Thursday into Friday, out of all the buys and sells and the sweeps and this, that, and the other, this is what actually changed. So people sold down the November 14th 500 strike from Thursday to Friday. So now when Monday comes around tomorrow morning, we're going to be able to see that the strike the open interest change. We're going to be able to see if this guy who put the December 2025 calls out for 460 really held those 2,197 strike contracts that he had. And you can see how aggressively if it actually stayed. Cool. So we see people say bid. A lot of people sold down their November 500 calls. 18,000 of them decreased. This, I believe, is a lot of overnight trading, European markets, people who did some European markets ads. I'm not too knowledgeable on the difference in this case, so I'm not even going to dive into that. If I don't know it, I don't know it. Just move on from there. But it seems like a lot of people are doing some call put stuff in the same week expiry. That's already passed now, so it's not anything new. But there's a lot of focus on these call contracts, and you get to see if people were holding it. So what I tend to do is, right, in this case of this guy buying the 2,197 calls of 460, what I'll do is I'll maybe check to see the I'm gonna be checked to see the open interest beforehand, and then graph in a way the open interest. Has the open interest continually shown that it is increasing? And all these people who are buying today and bought all week and spamming it, are they just buying it to day trade it? Or are they buying it to actually hold it and gain the incremental value over time? Because that also helps me. Because I remember, as I've showed you guys in the previous example, I'm looking to buy something today to ultimately maybe sell a 10%, 15, 20% of it in the upcoming week or two. Let it rock. Sell another 10, 20, 15, 20%. Another 3 weeks after. And then just keep trimming and trim and gather the full value so that I could be able to capture 15, 20% trades of the underlying asset, such as Tesla or Amcor or Palantir or any other example of the stock, in the same way, as opposed to trying to grab small incremental values several times to make up for that gain, right? So I don't have to come up with a new idea every 5 minutes to make money. I can literally rock and just vibe with 2 or 3 ideas, sometimes 10, sometimes just because I'm kind of weird like that. I like to really dive into it, but sometimes, you know what I mean? And I could just let it rock and trim and adjust and check the open interest. Is this flow actually sticking? These people actually buying for that duration, or were they just day trading this? Like what actually happened here, right? So my focus list that I want to leave with you all today is Amcor, PLPC, ENS, GXO, HLIO, and PLAB. Also SE. Those tickers I'll leave here. Honestly, I'm going to continue to do my research there, but the price to earnings on these companies is beautiful. The fundamentals are there. The ability for the long-term valuations to expand from here as well as actually they're on my list right here. I'll just show you right here. This too, kind of DocuSign, but not so much. But VIAV, HII, right? Those companies. Oh my gosh, I'm watching because, as you may know, like these companies are still nascent. 12 billion market cap, 3-4 billion market cap. These things are nascent, and they are important for the for these other companies to work out, right? They're growing. So I'm really looking for the next bagger. 4 billion. These you know what I mean? These are babies in a way. And if they can find a way to provide enough value in this market landscape to end up into 40 billion, like it's an opportunity there. So continue to look. You can trade the sexy names. I get it. Cool. It's Palantir. Cool. But also take a moment to understand that sometimes the deep value comes from sitting at your desk on a Sunday afternoon and just going through the entire stock market, or going through industries that you see on a day-to-day basis on the street that could potentially they could potentially be a growing market. So ENS, Energy is provision stored energy solutions for industrial applications, operates through business segments such as energy systems, motive power, specialty, energy systems with segment combined enclosures, right? Great. What do we know? Energy is very important right now. Very important right now. And it's up 36% year to date. It's actually relatively great. Net margins have compressed, probably because they're investing a lot in CapEx. So a lot of that money that they're making as revenue is getting expensed out to be able to support a potential increase in upcoming demand. Right? You're buying a company with a 1%, less than 1% dividend. Cool. So it's not going to give you crazy dividends if you buy the shares. But the market capitalization expansion here may be something to look out for. Oh, they report earnings in 3 days. Wait a second now. Hold on. Do I got to lock in on ENS and see what's going on? You know, maybe this whole energy sector right now is majorly important because we don't got enough energy for our AI centers that we spent so much hundreds of billions of dollars on for AI and compute and all the extra stuff. Maybe, right? So it's your job to look into these things. See what's happening on a like find the patterns. Similarly, EOSE did something similar to me. Like Tesla, we came through, broke the managed risk hairline, went back above. I still got an alert on it, as you can see the clock there, but was I able to catch it? I was not able to catch it. So I am caught offside with this scenario, was not ready to catch it. Depending on how we open, insane monstrous Friday. Damn. Depending on how we open, I may be able to get into this. First 30 minutes, I may watch to see how we hold the 16. If we hold the 16, or if we gap up and push into 17, maybe I need to see if we can pull back a little bit, give me a better entry. But I do like this name long term. I had a whole plan for it to try to get to 20 and be able to extract the value there, but I kind of missed it. So I need to now adjust my risk and see what makes sense there. So yeah, I may adjust the risk right now. Let's do it. So cool. We got the base. We flipped. Let's say if we don't, let's say 16th of the managed risk here part. So now I need to see if we hold the 16. Something tells me we're going to gap up. This name tends to sell off. I mean, like maybe 1550. Let's see what that looks like, right? We're probably going to have to also increase the PTs, right? Increase the PTs to probably 1750. I don't really even like doing 50s, but whatever. Or even let's just say the high here. Oh, it's locked. Okay, hold on. This high here. Obviously this high as well, right? Maybe even the wick high in this case, 19s. And then maybe I have a nice, long-term hold here, and I say 21. That's cool. So then what might I do? Probably take the similar approach and break it down like that. If I'm going to buy 40 shares or 40 contracts, I'm going to sell a quarter, sell a half, sell a quarter. That's generally how I move. And me moving like that with this structure of a 3 PT zone and a manager's care line that I move up and incrementally increase, it already helps make decisions for me. So I don't have to sit there and say, oh, am I going to sell? No, I'm going to hold. No, I want more profit. No, I'm going to take it out. It's already built in. It's already a pre-built strategy. Just follow it. Just follow it. I don't have to second guess. Should I sell here? Should I? Whatever. Like, that's it. So yeah. So I think that's pretty much it. Any questions for anybody? Last questions. I need some water. I'll be right back. You guys drop some questions. I'm gonna get some water real quick. If you want to join the WAP, the link is right here, as you guys all know. I would graciously appreciate that. It would be awesome if you want to join. I'll drop the link. I do market updates. I provide tons and tons of information. The reasoning behind it, why I believe this may increase. All of these awesome data points, my information, my data, trades that I'm planning on taking on. The SoFi trade I gave you guys, gave the WAP team October 20th. Thanks, man. Appreciate it. 100%. Saw the breakdown here on SoFi. Let's see how it panned out. Boom, baby. You know what I mean? We broke down. I managed the risk. I exited. I came back. The alert came through. It got me right. Boom. Was able to capitalize on it. We held into earnings. I listened to the earnings call. Companies expanding great, making great revenues, 35 billion market cap. Probably going to push into $30, $40 soon, especially if it gets announced and put into the S&P 500. Tons of institutional rebalancing. Also, to go back to Cody's comment on like institutional movement, being involved in an index, the top 500, S&P 500, being involved in the NASDAQ triple Qs, or even placed into the Russell 2000, the IWM small caps. That does great news for it. Why? Because a lot of these hedge funds and a lot of the people who are managing money, they have to buy these companies. Have to. Because they're trying to put indexing together for people who own the market for a long period of time. They want the markets are built this way to intrinsically add value to it because you're being a part of the S&P 500. So everybody who's saying, "Oh, just buy the index and sit," guess what? They're buying a piece into SoFi if SoFi gets included in the index. So the belief is that from prior, no inclusion in the index, there's a whole sector of people who index only and do only those breakdowns or only investment into index that aren't buying SoFi. So what happens when supply and demand comes by? The pendulums are still swinging, bro. It went from not a majority of people, a solid amount of people knowing and investing in the company, to now it finding its way into, wow, the majority of people in the market have ownership even to a piece of this company, simply because of the fact that it's a part of an index now, and that it's a major, intrinsically built-in market thing that the people that participate in the markets just do. Buy the S&P 500 and sit down and relax. That's it. It's a news thing. It's an institutional thing that can drive the stock higher because of that. So I'm sharing trades with you all. I'm sharing my breakdowns with you all. I'm sharing deep, long term. I think this is a 20-minute video of me talking about what's going on in the quarterly breakdown, right? There's tons and tons of value here for you all with more and more research. So again, if you want to join, please feel free to click the link right here in the chat and give it a join. But again, if you have any questions, we'll be right back. Let me get some more. I'm gonna just go ahead. All right. Not much questions, I guess. Cool. Well, it's fair to say, I guess I'm done. So that's pretty much it. I quite literally just outlined 90% of my strategy, if not 100%. So yeah, I think if you have any questions, obviously, of course, feel free to reach out to me. I'm pretty sure everybody here at least has my phone number or some way to reach out to me, whether you're part of the Integral Pulse or other avenues. I appreciate you all for joining and showing the love. We're coming up here just shy of 3 hours, but that's enough from the agent. Peace.